Check. Check. Good morning, traders. Welcome to the Traders Lab. Sorry for the delay. Had a technical issue here from Costa Rica. Thanks, Dan. How we do it in YouTube? Yeah, good morning. How are we doing in YouTube? Are you guys hearing me okay? Oh, okay, Dan, thanks very much. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B., streaming live from Costa Rica on a tin can and string. And we do have power fluctuations, and the internet is kind of like, what's the mood? So if I drop out, be patient. I will come back in, but it might take a few minutes. Let's take care of business. We have a very full day today to discuss. And if you've been following the stream, you're going to see auction market theory and what we do in the Trader Lab on display. And the idea is to help traders understand market mechanics, how the market works, why it does what it does, and how at times using structured trades or vetted trades you can get in alignment with it. In addition, the key to this is integrating order flow tools in order to get as granular as we can to see inside participant behavior. When you put these pieces together and develop a business plan or trade plan, it may give you an opportunity then to create longevity in a career in this business. And the goal of the Trader Lab is to help traders differentiate between our fantasy of what the business is and maybe what it really is. And everybody has to kind of do their own thing. So it's not like this is the only way to do it, but if you can develop an understanding of market mechanics and how the market tends to work, I think it could go a long way in advancing your development. And of course, like everything, your mileage might vary. You got to find what speaks to you. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, and please remember this is not a trade calling room. However, if we get there, we'll talk. Also, there's a couple opportunities that are going to be open for you in the Bookmap server. The Cyber Monday is still going, where you can get 60% off 1 month of Global Plus with bells and whistles. And for those of you who are subscribers to a Global or Global Plus or even the digital version, there's a contest going on with substantial winning opportunity, even the $1,000 cash. And that's going to be starting in just a few days. But you need to be a subscriber, even to the free version, the digital version, to participate. And you should go to bookmap.com, check it out, and you could see all the particulars. I don't have time today because of the interruption. I think a monkey was swinging on a vine over here or something, which tends to happen in Costa Rica. So let's get into it. Now, there's a couple things I want to show you. By the way, there's the futures competition. It includes data, all kinds of good stuff. The advanced trading package, and this is the Cyber Monday deal, 60% off. And again, go to bookmap.com if you want to peruse those things. I'm not sure if I do this, if it's going to blow things up. Don't know. Okay. Now, let's go take a look at the market. And I always start the same way. The thing about the market is it trades in fractals. And now, what's a fractal? What is a fractal? A fractal is what you guys think of time frames. Now, this is a higher time frame chart, and it is based on the auction. This is the volume profile. Now, I don't have time to go do a deep dive here today because I want to move on so you could see how these behaviors might work. But let me explain what you're looking at here. Friday, the highest volume, which is under here for this day where we had selling, and that selling might have been just profit taking, right? This 98.25 was the highest volume. Now, the auction is really a volume-based process. What it is shopping. So anything you know about shopping, bring to trading. Now you're a shopper and you can maybe use that from a conceptual point of view to understand how the market works. If this is the fair price on Friday and going up in time frames, it's the highest volume for these past 3 days, then we might say buyers and sellers are willing to do business there. However, if we open below it and we come back and check a retail price where it was fair and it's no longer fair, it's possible, underlining, that we might reject it and go lower. Who knows? Now, here's another piece. And all this is posted in TraderLab, by the way, before the market opens, and also scenarios, which nobody knows what will happen. So let's not think about prediction. Trading is not a predictive business. It's a maybe. The market's going up, up, up. What's under these lows? Sell stops, sell stops, sell stops. And this was the consolidation we broke out of. Now, this yellow line represents the highest volume from this day here that we had left behind. So basically, we gapped, didn't fill the gap, up, 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 going to the moon, right? Well, market goes up to go down and goes down to go up. For the market to go up, and of course, everything is random and often needs to go down. So we can get new shorts, take out the weak longs, and then potentially go higher. Now I'm going to show you the current higher time frame, and then I'm going to go into the microstructure of how this day developed. And by the way, I hope you get something out of this. So let's put these side by side. And this, again, I don't have time to do the kind of deep dive I would love to do for you guys because, there's a lot of streamers and a lot of different ways to slice and dice the market. I'm trying to find here. Let's try it this way. So this is a micro composite high volume node, same levels. Now there's a little more detail over here because I expanded these out, but you'll see they're the same. Where is the current high of day? 98.25. This was before the RTH opened. This is the current day. Okay. So what is down here? All these levels. What are we doing? We're going through the levels. Where's our potential target down here? 62.5. 62.5. If you're in the Trader Lab, you cannot predict what'll happen, but you can understand what might happen. And if the best we have in a random, uncertain environment is maybe, is it better to know what might happen instead of just playing a video game or making it up? The market is random. So the idea of Trader Lab is to help traders understand possibilities, potential, and then use a process to identify when there's change in the behavior. And if you can recognize the behavior, and I share a process, I don't like to use the word teach, but I am an educator. But what I do is I just share. I've been going on 45 years of trading, both professionally and otherwise, and I've done what you guys have done, And as we all know, that can be a painful circular experience where we never go beyond trying to fix something that may be actually a defective process, and we don't know it. That's the problem, you might say, because we have winning trades and we believe, and as I did, that I was always on the right track. I just had to make it better. This is human nature, and because we're in a random environment, we're kind of stuck with beliefs that may or may not be appropriate. How are you guys doing, by the way? You hearing me okay in YouTube, and how we doing in the Bookmap Discord Trader Lab community? You guys, because if I disappear and go over the hill, I'll never know. Okay, great. Thank you. How we doing in YouTube, guys? Okay, now let's take a look. Now, there's a couple things, and again, some of this is advanced, and you're not going to get it by just coming here and watching this. Trader Lab's a community of like-minded traders, and it doesn't matter what you do. your methodology. What matters is you bring it, you share it, and maybe improve it. Or bring your beliefs, and maybe you might get your beliefs challenged if you can't measure them and you don't have a statistical edge. Trader Lab is about the business of trading and helping you build out a plan that has an edge. Edge is gaming theory. Gaming theory is how the casinos operate. And, we don't want to be gamblers, of course, but what is the difference between the casino and the gamblers? Well, the difference is the casinos only play games that have a statistical edge, but there's a lot of things they don't control. They don't control what comes out of the deck, and they don't control how the gamblers play the cards. So they don't have control there. What do we do? Well, some of us are just gamblers. But in the Trader Lab, the objective is to create statistics, so we're sitting on the house side of the table. And yeah, the gamblers get paid. And depending where you are, maybe the cocktails and the ticket to the buffet. So if we understand there's a business model that already exists that is successful, then maybe we can emulate that business model and not try to reinvent the wheel, but adjust the wheel we run on or the track we run on to fit that proven process. Now, you do have to do the work. Nobody can hand it to you, Trader Lab or anywhere else. But what Trader Lab can do is give you a better understanding of the business you're in, and tools plus order flow plus a leveraged community. Those tools can help you accelerate your development. But in the end, you're still going to have to find what speaks to you. So this is the RTH Open. And please post your questions. And if you're in YouTube, give a like. So this is the RTH Open. Now, there are certain tendencies that we observe in the market. Now, remember, the market's random. So the randomness really throws us. And the other part of randomness is uncertainty. And uncertainty triggers fear, hesitation, and the need for confirmation. It's human nature. It's a trait. It's part of our primal wiring. We're not going to get rid of that. We're going to always experience it. But the way to combat those triggers, emotional triggers, which cause us to do things in this environment that are not in our best interest, is something called statistics or edge. That's what casinos do. Otherwise, every time they pay a gambler and they walk out with a suitcase of cash, they're going to get depressed. They're not going to deal the next hand. They're going to change the game. You follow what I'm saying? Well, the casinos don't do that. Yet we do. If we take a stop, we look for confirmation on the next trade. Maybe we skip it. Maybe if we're actually profitable, when our plan is in alignment with the market, we don't want to give it back. We stop trading. Maybe when we're having a losing morning, we keep trading, and dig a hole for ourselves because we're motivated to make it back. Is that you? If it is, it's common behavior. So what's the behavior of the market? This is the RTH Open. This is called a variable high volume node. Remember, I started with market profile in the 1980s, and over time I modified it based on what I observed. And early on, I was trying to do what I did to fit into what the quote formal teachings were. And I learned it from Peter Stottlemyre. He created it. He was at CBOT. And he was a grain trader. And he came up with he was statistically oriented. And he came up with this idea of standard deviations and certain mechanics of the market. So anyway, I thought that was a pretty interesting idea. I'd never seen anything like that before. So, and I tried to fit my indicators that I was using at the time and everything I thought I knew that I was trying to make better and get to work. And I said, oh, this is good. I'll put them together. And I'm going to say that didn't work out so well. It worked out. See, the problem is everything works out at times. This is too high. Now, how does the market tend to work? The market goes down to go up. So right here, now I looked at this and I thought to myself, I said, well, we might have a long as our first trade and the target would be this. Now let's remember, where did that come from? Right there. So the early long would be up to here. So the goal would be, if you have a long and it's in your trade plan, to get long to there. Then if we don't get through there, it creates a short coming back the other way, and then it opens the door to wherever. You follow me? So this is why you'd have a trade plan. Then your job, and I also posted in Trader Lab before the open, the market was long. We did not take out, we had stops under Friday's low, and as I just showed you previously, Thursday's low, Wednesday's low. So for me, even though I have a long here on the open, this is my target. Now, the other part of this is, if this is my target for the long, do I want to take the long, or do I just want to see what happens here? Because this has a alignment in multiple time frames. This orange line is the highest volume for these 3 days. There's a yellow line called the naked volume point of control, which is right there, which was the highest volume from Friday. Confluence, Uber, not the car, the taxi, Confluence. So if you took a long, this is your target. If I don't get below it, if I can't get above it, what does it say? Let's talk the language of the market. I'm not paying that. You went to the store, and now the valuation of an S&P is not here anymore. It's too high. And the shoppers go, forget about it. I'm going to shop elsewhere. And now the longs in the market become sellers, and new shorts come in. So in Trader Lab, again, potential long to there, or short to take out yesterday's low and go south of the border. This is Trader Lab. Now, so let's watch. Let's see how this works. So right here, you get your opening swing high. You have your overnight mid, and there's other statistics, by the way. And in fact, checking this up here is about, I'm just going to throw a couple because of my time, about a 70% probability you get here. Would it be useful to know probabilities and statistics? Maybe. Up to you. Me? Yes. Because this business is about edge. Getting to the ETH mid, you're asking, I know you are, I can hear it, is an 83% probability. Taking out the previous high or low, 85% probability. Well, if I can't get above here, what does that open? If I can't get back above this price, does that put this 85% probability? That's his Trader Lab. Now, guys, be realistic. There is no love potion number 9. We're always going to be in a environment of maybe. Write that down. Take some notes. We're in an environment of maybe. We're not in an environment of certainty. Our psychology screams for predictability and confirmation and certainty. Wrong business. Wrong business. So if you can't have that, what can you have? How about statistics and probabilities? Same as the casinos. That is what you can have. Then you shape it to your time frame or fractal. Anyway, that's Trader Lab. That's a Trader Lab community. There's a link in the bottom of YouTube, and there's no cost. I would encourage you in your journey that you stop by the Trader Lab. And if you're like other traders, it's going to change things for you. And not for everybody, of course. It's not for everybody. Nothing is for everybody. But I think you'll come away with a different perspective. And then it's up to you to find your groove. You know, what fits for you? Some traders are only going to trade from here to here. Other traders are going to put a trade on in here and go all the way down to 62. Would that work for you? 30 points. It's all up to you. But the trade is the same. What changes is the rotations and the fractals you operate in. So right here, market's going up. We're at our location. And again, there's no precision. This becomes the opening swing high. This becomes the opening swing low. So why? We open, go down, cross the range, get to our area, break low. You see the aggressors. Why didn't we go up here? You got icebergs and you've got passive sellers. Hold on a second. I have to adjust something here. Yeah, this is too high. That's the absorption detector. All what the absorption detector is doing, it's showing me that I have limit orders here, and what it's measuring is icebergs that are going off up here. So right here, you see this buyer, this delta, and delta is aggressors and limit buyers. So passive buyers and delta is aggressors. And right here, I'm seeing absorption. There's a seller absorbing. I think of these like Pac-Man. The buyers went through here. So my sellers are here. My buyers are above. So right here, this guy is under the bus. The seller, these icebergs. Okay, going to the moon. And right here, looking for this. So what happens here, though, and I don't know this till hindsight, when I break under this buyer here, there's a change in behavior right here. So now I have my variable high volume node. I'm going to put a little line here. Now, this is to help you see structure. So when I break below this consolidation, it's being rejected. Now, this is not an actionable thing. So let's just look at it now. Now, I break below here, and I'm now checking this volume. I have fallen out of this. This is called the distribution. I'm fallen out of it. So right in here is something, and you see where the low volume is. This is called the low volume node. So I'm just going to mark it. And so right here, if we look at this thing, and this is kind of how the auction works, and there's no precision. What we're trying to do is get a sense of volume distribution. So right here in the micro, this was too high, and you don't know until hindsight. And now we have this, and we break away from the volume that was in here up to this point. We break away from it. Now we have a low volume area. So what that means is I can come across the range. I can come up here, or I can just come out here. And if I can't get back into this, then now this is my fair price. And my yellow line, which is called developing volume point of control, which was our early retail price, has been rejected. So now the new pricing is here, retail. And what happens in shopping? Well, if the price goes too high, the volume dries up and shoppers won't pay for it. Now, somebody who absolutely has to have the can of tuna for the casserole will pay a high price, but the volume tapers off. Buyers and sellers, if the sellers want to sell the tuna, they got to lower the price to where the buyers will interact and everybody perceives it's fair. If it goes on sale, then what's going to happen is the sellers, if they're being absorbed by the buyers, are going to raise the price back up, and it's going to come to retail. This is what creates these rotations around, and this is called a distribution, or consolidation. They're all the same. So now what I know is this is too high, and I know this is too low, but what's happened here? Well, the buyers in this leg have their stops under here. Do I want to get long now here with sell stops here? No. Why? The market goes down, and there's stops here, to go up, take the stops out. The market goes up to go down. That's rotational trading, and the stops are here. So no longs for me. Shorts only. So I come to mid. This is my outside edge. I'm below the ETH volume point of control, which may be material in this. I check my VWAP. I have my mid, and my micro outside edge is up here. So if I can stay under this area, and under here especially, then I can break low and get in and take out this and go for yesterday's low. Remember, 85% probability. So let's see what it does. Low volume node is here. Mid is here. Variable high volume node is there. I'm in multiple fractals as you think of them, or you guys might think of it as a time frame. I don't use time. I really use behavior. Just another way to look at the market, because I'm not restricting the behavior of the participants by the clock. Now let's go look at a couple other pieces. Let's go into order flow a little bit. And post your questions if you're in YouTube, and same thing in Discord. I'll do my best. And remember, if the stream drops out, it'll be because of technical purposes, and I will be back in. If you have questions, please post them. If you're in YouTube, please give a thumb up, a like if you like this. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to review, reverse engineer, make it part of your portfolio of trade samples so you can review them and build out your business plan. So what happened here? Right here, I have absorption. I have selling icebergs. So I'm seeing the sellers over here. So I have sellers, I have mid, I have buyers. So now when you see a green bubble, it doesn't mean the market's going up. I mean, it could. It's delta. What is a delta? Well, delta, you see 31 buy stops. I see 15 buy stops. Why would I have maybe more buyers here, more volume here than I did there, and more delta, but I have less stops? Does that mean maybe they're being absorbed? Maybe I'm exhausting? And I'm only saying doesn't mean that because I don't know. But I know what it might mean. Remember, maybe. So I have my sellers below these buyers, and the selling icebergs were here. Once I break below, it sets up a potential short. And here's my variable high volume node. This is my resistance. I'm taking you into multiple concepts. And remember, this is shopping. I'm not paying that. I'm going to get my tuna somewhere else. And we leave the store. Now we come back and check the store. Right there, variable high volume node. Now I'm in micro because triggering structures are microstructures. These are shorts in the Trader Lab. If it's in your plan, embed it. And where were we trying to go? Take the stops out. And what's below the last 3 days? Stops, stops, stops. ETH low. I forgot to mention this statistic to you. And past performance not indicative of future results. You got to vet this. There's a 93% probability you'll take one of these out, either the high or low. Over 80% probability we take either yesterday's high or low out. Can you see how statistics might give you an edge? And again, you have to vet these. And of course, again, doesn't mean anything's going to happen. It just means maybe. So where are we trying to go now? Well, we have other lows to consider. And now we have this. Another structure. Actually, let me see if I've missed any other structured trades here. These are structured trades, but they're more, how can I say this? The mid in this configuration is viable. The variable high volume node, which is saying in a microstructure, this price is too high right here, is what you're going to lean on. And this is more advanced Trader Lab processes. You know, when you're starting out, you really want to start with a broad stroke. No, I can assure all of you, if you're going to go to any educator, Trader Lab or anywhere else, there's no 2-month solution. And now you're a profitable trader. If you're looking for that, in my opinion, it doesn't exist. We all want it. We all are experiencing FOMO, and human nature is to jump from chat to chat to the next best thing. The only thing you need, you know, all the marketing gurus. That's not the way this works. This is the foundation for an advanced trading education. If you're going to become proficient in anything, be prepared to invest time and a lot of time to undo potentially what you've done in the past that does not contribute to your potential success and longevity, and also to do the work to create metrics. And the last thing we want to do is do work. We want to push the button for the dopamine fix. That's human nature again. And again, that's why many retail, or I'll even say most retail traders, do not have a career in this business. Lows, fuel, lows, fuel. So the stops, all the stops under here is our target. And our final target was 62.5, which we may or may not get to. Does it matter? I don't know. But in Trader Lab, you already know that. What you don't know is if, how, when, because the rest of it's random. So let's continue. This is the first hour's low. Now you're asking, what about the statistics, Tom? Well, there's a 97%-ish probability that we are going to take out the first hour's high or low. I'm not seeing any questions in YouTube, and I'm not sure if I'm really connected over there. Can you confirm that I don't have any questions yet in YouTube, or just post something in there? Because it looks like it might be dead on my end. I can't tell. So we come down. Now we have the IB. This is the initial balance. Now the initial balance is the first hour's high or low. So the high of the day, initial balance high, into our target zone for a short, or whatever happens, outside yesterday's low, into the fuel. Thanks for playing. Broker sends you a gift basket. And then we have this. So this is a structured trade in the Trader Lab. Can I get confirmation that I'm still percolating over here? I am not seeing anything being posted. Okay, thanks, Stan. All right, I guess we're still going. If you guys have questions, please post them. I'll do my best. And you're all invited to the Bookmap Discord Trader Lab community. Don't forget, there's no cost for that, and there's a link in the bottom of YouTube. Notwithstanding some technical difficulties, if I do drop out because I'm on a laptop in Costa Rica, I'll come back in as soon as the internet recycles. So right here, we have our buyers. This is absorption. I break low. I come back and test. Now, this is our IB. And that happens at 9:30 Central Time, where the first hour is locked in. So when we break below this, it sets up what's called the IB continuation trade. It's a structured trade. There's 60 PDFs you can download in the Trader Lab, plus a library of webinars that shows many examples of these trades. And I've shared them because they can be a basis of a template. So you can start building out metrics and knowing that the idea or business of trading is waiting for the trade, not playing a video game. And you have to find a way that aligns with your fractal time frame. So if you didn't have a trade yet, you'd just be sitting here. And I know you're seeing all this, and that voice in your head is going to be telling you, I got to get in, I got to get in. When you hear the voice in your head, you're hearing your enemy, and I call it hide. That's emotional triggering. And emotional triggers are going to take you out of the business if you don't learn to understand what it's all about. And you could learn that in Trader Lab because it's common, because we're wired. So right here, this is our structured trade. It's called the IB continuation trade. So what do we know? When we break below this, now we have a qualified trade. Now we have to fit it into the structure. So where's our structure? Well, we want to sell this. Now, this is not put an order in here and see what happens. I mean, you could. That's not what I do. I have to look back here and go, what happened here? Because what happened here? Too high, microstructure. I'm going to start throwing some lines on the chart, only so you can see this structure. This is a consolidation right here. Let's just look at it. Now, I'm going to just take you down into something. And I'm only doing this to help you see the auction as you think of them time frame. Remember, there's no time involved here. What's involved here is where the participants auction too high, too low, too high, And inside of this, I'm just pulling it out to show it to you, my sellers leave this. This is a store or an auction. And in this store, this is the retail price where the high volume is. If you come over here, you can see it there, that node, which is in alignment with this little line. So what it is a consolidation, chop, chop, chop. When you break away from a consolidation, we can come back and check it. If this out here where the buyers were, that's why we rotated up. The sellers are here, the passive sellers, the passive buyers. That's order flow. Break, sellers take control, pull back and test. Subject to your plan, you could be taking shorts if you're in a very short time frame. This is not a recommendation. I'm only showing structure. The structure exists in all fractals, all time frames, and your stop would be here or even here. Your entry could be there with your stop there. Not recommendation. Structure. I'm sharing structure. Market breaks down, and we haven't broken out of the IB yet. Now we break the IB here. So where's my structure? Let's come back. There. Let's look at the next micro high volume. Now this is not something you're going to get because it's moving too fast for you, and you have to develop unconscious competence. And this takes practice. That's why there's no quick fix. There's no holy grail. Notice here a trigger, and here, let's look. Chop, chop, look what you see here. Chop, 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 break, test. What do we see here? Chop, 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 break, test. What do we see here? Chop, chop, break, up, up. IB is coming in. It's not in yet. Where's my resistance? It's here, here, here. So let's just watch. Chop, chop, break low. And I'm still looking for the trigger, which happens at 9:30 Central Time, which is based on this low right here, which is aligned with this. So let's keep watching together. Now I have my IB trigger. Now I'm looking for a short. This is called the IB continuation. Where do we come? Let's come back. Too high, break, test. Too high. What's over here? Micro high volume structure. Right there. Fractal is, watch. Now again, you're not going to be drawing these lines on your chart, neither am I. But if you can start visualizing what it means in the order flow, why does the market stop there? Why did the market rotate here? You see a selling delta or a red bubble. So why did it go up? Because there's a passive buyer here. And it might be these buyers buying here. And then we know there's a seller here, and this doesn't go up and doesn't get back over here, we can come down. That's what I know. I don't know anything else. I break here and I see absorption. Let's watch. This is my structured trade now, and I want to find a trigger or a location to get short. I'm taking you through the pain of analysis so you can see how this might work. Where's my resistance? Here, it was too high. There's my sellers. Let's watch very closely. What happens here? Where's my selling? I don't see it. Do you? I go higher. Where's my next location where I had a trigger? It's here. Where do I come back? Right there. There's my resistance. Now here, no way to know. It's going up. I do know there was selling there, and I do know the volume in here was too high. So that's what I know. I know down here, this is too low. I got my trigger, I got my test, and off I went. So I got support, and then I have resistance there because we had the sellers, and I have resistance here, and I got it there. So I now need to look for a trigger for this short. And now remember, it's a structured trade, but you need a trigger. You do not go, oh, I've got the IB short. Let me put an order there and see what happens. No, well, up to you, but me, not so much. So what happens here? Let's now go into the microstructure. So right here, I think I don't know what's going to happen, right? I have my buyers. It's all wonderful. Structure is now here. My resistance is here and wherever. So I need a trigger. I don't have a trigger because I need alignment and a trigger. So there's my trigger. Great. Now what do I do? Can I get in on this? Watch. So here is your passive side. Here's a location where it was rejected previously. Here I break below this microstructure. I'm going to throw a line in here. And you have to, now, how can you do this if it's this fast? Great question. And when I was figuring this out, I had trouble with it because I didn't have yet developed understanding the language. So I have this. Now, where do you see this here? I don't have a break here. I get my buyers. What do I have here? I'm looking for it right here at this volume to do this. It does the opposite. What happened here? Looking for it to go down. What did it do? The opposite. Trigger to the upside. What happened here? Test, trigger to the upside. What happened here? Break high. Test, trigger to the upside. What happened here? Trigger to the downside. What happened here? Test. You see it? The change? Microstructure, fractals. So this is your entry. Your stop could be here. Now I understand, believe me, that you're looking at this and if you are a conscious, logical individual, you're going to say, it's too fast. I can't do that. And I'm going to say, maybe not. Not now. But if you combine order flow and an understanding of market mechanics, you might be able to develop the skill. The other part of this is I don't use indicators because I find, well, if you've been following the stream, I used them for years and years and built systems because I was trying to kind of get the indicators to do the work. You know, oh, it's going up, it's going down, time to buy, time to sell, and you know, however you try to squeeze it in time frames down to the shorter and shorter and shorter, but you got all these layers of fractals. You can have one thing saying get long, another thing saying get short, another one saying I don't know, which is creating conflict and ambiguity. I found the more I removed the ambiguity and conflict and only used anchored inputs, the better my results became. And more I became reliant on trying to read the structure, price action, and what does it mean? So when I look at this and I have order flow, I know what it means, but I can't tell still what's going to happen. That doesn't change in a random environment, but I can recognize because I'm not using time frames. I'm using the behavior. Look, follow the behavior. This is too high. I break away. Okay, that's resistance. And I'm coming down, 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 down. And what? See the change? If this is a consolidation, there's passive buyers here and there's passive sellers. Well, when one side gets run over, now I got my support and it's sitting right there. Right here, I break high. So this is too low. Right here, I break high. That's too low. Right here, I break high. That's too low. Right here, I break low. Too high. This is a short in the Trader Lab. And how do you learn this? You might be asking yourself. How do you learn it? Intentional practice. Language. If you've ever tried to learn a foreign language, think about what you go through with that. Or it's called unconscious competence. If you want to learn driving a car, eventually it's conscious. You are incompetent when you start. Remember the first time you got behind the wheel of a car? How much gas do you give it? Does it lurch forward? When you put your foot on the brake, do you hit the windshield or do you not? You know what I'm saying? Trying to look in your side view mirrors and being completely freaked out. And then you're consciously thinking about all the steps you have to take. And then at some point you become unconsciously competent. You're no longer thinking about it. Trading is the same way. But because of the randomness of our environment, it takes a lot more concentration and there's a lot more randomness and the emotional stimulus of uncertainty that we have to deal with. So you need to understand the environment you've chosen to be in and that it's not like anything else you've experienced. It's so foreign. Yet what we try to do is relate it to our real world, if you will. But it's not the same world. We have to really learn a different way. So it takes a lot of time and intentional practice to be able to operate in this time frame as you think of it. You don't have to operate in this. But as you get proficient, you can go down in fractal for execution. Because the quicker you can execute based on statistics, the lower your risk could be, and the easier or quicker it is to attempt to get risk neutral. So the worst that happens is you scratch the trade if it comes back above here. Now, let's look a little further. Now we're below the IB, and we have targets open below. This is a target right here, which is a separator into the distribution below, and this is our target that's open below, and that's it. Now, will the market get here? This is part of the joy of trading. There's no way to say because it's random. Does that make sense? I'm trying to see what's going on in YouTube here. I am having a problem with it. Okay, I just got my questions. Here you go. Sorry, guys, I was having trouble here. I think I answered, Adil, what the probability is of first hour high and low getting taken out. Both getting taken out is about 29% probability. Don't quote me on that, but generally speaking, how do I know if the market's trending up or down? It's time frame specific, but the higher time frame is up, but the sell stops are below Wednesday, Thursdays, Fridays lows. The market's been going up. The market goes up to go down. It rotates on top of itself, and then it goes down to go up. So subject to how we behave today, now we have shorts in the market. We got the longs out, and now we can set up a rotation up. Now, that's not a recommendation, but the nature of the market is to do both. So we go up to go down, we go down to go up. And if you have a trade plan and you're in Trader Lab, part of what you would do is you'd be looking at the current condition of the market. I hope that answers your question. So is it trending up or down? Higher time frame, trend is up. Intraday time frame, down. Targets below, 62.5. Who knows? I say who knows because nobody knows. And it's just an area. So we can get there or not. We may get there tomorrow or not, and it depends what happens here. And we might have already hit our low. There's no way to know the answer to that. So I hope that answers your question, though, about that, okay? As far as trending up or down. You know, the thing that's all on about up or down trend is it's really a function of the fractal or time frame you trade. Some traders, the trend is still down. Other traders are going to be long and riding these shorter rotations. So for me, the trend is down. So for me, I'm only taking shorts. And again, it's just my time frame and managing the trade. So if I'm only on shorts, because right now I know the longs are under the bus currently, if I get a long structure, it's a trade. In other words, a long trigger, I might just cover my short and then subject to what happens and my plan, put those shorts back out again after a rotation or be done with it. It doesn't matter to me. I'm not here for action. I'm just here for high probability outcomes. So I just kind of trade that in my time frame. Well, let's look right here. Like, for example, you're coming down here. Let's go to microstructure. Now, the thing that is a catch-22 for all of us is you got to select a time frame to operate in and derive metrics. Some traders are shorter time frame oriented and they're going to be more micro oriented. When you are clamping down the fractals, you're going to get taken out because the market, especially like ES is an example, the average true range, or let's say the harmonic, runs about 5 points. So that means just the noise in this thing is going to rotate. And if the market, as an example like this, is short, where's the stops? Traders like us, retail traders, are trailing their stops above the swings. At some point, wherever that is, these trailing buy stops will get squeezed out and you'll get the buyers being the stops and maybe new longs for traders that just trade these short rotations. So you always have to anticipate you're going to get taken out. And that's okay if you over time have a statistical edge that says that's the best way for you to operate. So now, depending on how you operate, now I'm going to show you some other ideas. This becomes an individual thing. When you look at this here, let me just take you here. When you break away from this up here, it's a consolidation. There's high volume, and then what separates the consolidation is a low volume node. Low volume is when you get this. In other words, it didn't auction or chop, it just ran away. Then it starts a new auction, and it leaves a gap. You guys would define this as a consolidation that broke out. Same difference. It's just another way to define it. And the outside edge is here. Then, and we broke away. Then we start the new chop, and this becomes the top of a consolidation, and this becomes the bottom, and we break away again. So this chop is another consolidation. We break down. Now you see here, these tops, this is the top side of this consolidation. So sequentially, we're auctioning. So what it's doing is the market is really a shopping experience. What's too high? What's too low? What's retail? If this price becomes too high, we're going to leave it and continue the same thing. At some point, we don't know where that is. That's part of our joy of randomness. It will find too low, let's just say hypothetically, this is too low, and then it's going to start doing this and squeezing. We don't know. So let's see what it does. Right? Just see. Let's just watch. So what happens here? My high volume is here. My high volume is here. My buy stops are sitting out at this edge. We didn't take it out. Too high. Down we go. Watch. Now, this is just a way to stay in alignment with the auction. Too high. High volume is here. High volume is there. Outside edge is here. We could easily come up here, pick the stops out, get a selling trigger, and we didn't here. Notice the trigger. It's not necessarily actionable unless you're in Trader Lab and you have a plan for this. There's a trigger. There's the test. Your stop would have to be out here or nothing. These are all potential trade management processes. So when I see triggers and I break below and now I have structure, I can pull my stop down. Up here, my stop would be in here. Break down, leave it. My stop could be here. And again, this might be too much for you to leave on the table. It's 4 points. Where do I come back and test, you ask? Where's my volume in here? Well, it's there now. And where's my outside edge? I'm just going to draw a little something for you. And I hope you're getting something out of this. You know, this is a way to, as they say, slice and dice the market. Whoop. Come on. So this is where the sellers were up here and the buyers are here. You see the absorption? So the buyers are down here. The guys who bought this, whoever they are, don't know, are here. Sellers are here. This is your, and inside of this, you have two high volume structures. There and there. So break here, test there. This is a potential short, or you got this one, you break out and your test is this outside edge and that high volume. If you took a short here, now again, not a short, but a trade management process when you break away, you can move your stop here, subject to you vetting the plan. And then you'd be taken out. You're done. And I have my data gap. Hold on. And we're still going for this. Now, the thing here is you could be done with this trade and be finito. You don't have to do anything else. But let's come back and think about what's going on here. This is our current low. Absorption is here, going to zero. Now, with this kind of stuff, let's look. So right here, no clue, this is my resistance. So right here, this price was rejected. When I come back here, right here and here, this is resistance. That's resistance. So right here, you want to see it continue down. This is my edge. Now out here, what is here? Stops. So what happens here? Stops. Trade's over. Finito. So you could be done. That's all I can tell you about it. You could be done. Now this is called VPOC migration. This is what you call an event. Now, and I haven't seen this. So let's look at what this means. When the VPOC migrates, let's talk about fractals. In all these microstructures, the high volume is the retail price, right? Too high, too low, break, whatever. In the developing daily time frame, this is the retail price, the yellow line. It's the highest volume for the day. That is saying at the moment, everything above us is too high. And there's two possibilities. Here's the possibilities. This shifts. It does the Acapulco cliff dive and we go here, or we have a change in context. Follow closely. If we come above this, it changes the behavior to something called, potentially underlined, mean reversion. Mean reversion is outside in trading. So it changes. Directional continuation trades taken out on your trailing stop, subject to how you manage your trade. Now it's like, what's going on? VPOC migration. Now we're in a structured process in Trader Lab. Let's watch. Is this correct, by the way, guys? Did this just shift? I do not know. Joe, institutions don't use stops. It's us. They spread things off. They trade differently. They're not us. Stops are really, I'm not saying they don't use stops, but they're hedging with options. They're just doing all kinds of different stuff. We're the guys with the stops because we're risk adverse and we're really small fish in the pond. Here's sellers. There's absorption. So VPOC migration. Is this accurate, guys? It just shifted? Okay, thank you. So here's the possibilities right here. If this right here, we test, we break low. So if we can't come outside, which we might, then the next possibility is to continue lower down to this target, not a trade recommendation. If we come across the range, we can do this. We can come back up here. So the structured trades in Trader Lab are, subject to you vetting it, a short from here to here, or come across the range and a short from out in this area with the low volume node in alignment with the IB for an IB continuation trade. So we're going to mark this. It's a low volume node. The IB could be a trade. You know, when I say could be, that's the best you got. So if we come out here, here's what you got. This might be too high, and we're going to come back and test what was too low. Is that logical? If we come back across here, we're going to squeeze out And we're going to come to the potentially back here where there's stops, mid VWAP, low volume node, outside edge. That sets up a short back to there and then potentially out the bottom, or not, or not, because maybe not. I don't know. Does that make sense? That's two structured trades that are sitting in Trader Lab at the moment. By the way, if you're visiting, guys, and remember, if the stream goes down, it will reconnect. If you're interested in what Trader Lab's all about, it is a group of like-minded traders who come together to leverage their collective experience. It's based on structured trades, auction market theory, and using a high-tier order flow tool like Bookmap to see inside participant behavior. There's no right way to trade, and there's not one way to trade, but you can learn what might give you an opportunity to create sustainability in a career in the business of trading. The business of trading is quite different than what most retail traders imagine it to be, because all they can do is imagine what it is. They don't understand what it is. I certainly didn't. So I kept thinking it was predictive, and then looking for confirmation. I didn't understand it was gaming, where there is no confirmation and you can't predict anything. You can only extract metrics and then, like the casinos do, play your game when it shows up, and maybe pay the gamblers, or maybe take some dollars from the gamblers. And if you have a statistical edge and you execute that edge, which means take the next trade, pay the gamblers when they win, not make it up, not impulse, not get bored and look for a dopamine fix. Over time, if you do the work so you know where your edge is, and you don't do anything else but execute your edge like the casinos do, only play the games with an edge, that's a business. Might not be what you imagine it to be, but that's what it is. So then it's a matter of, can you extract the metrics? So if you took a short here, your trade would not be doing so good. And that's life in the fast lane. As soon as it can't get below this structure, remember, this was resistance. This is resistance. 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 Get above it. Up to your trade management. Now, where's our next trade? We have a couple things to look at here, but what we know is there's stops here. So that leads us up to this. And we know there's stops at the VWAP in the mid. Now, I don't put an order out. What I want to do is I'm always going to look left, because I want to see what's out here. I know here I had sellers, there was absorption, and there's going to be stops out here, here, and here. So I have to be thinking now, where's my next trade? Well, if I don't have a trade, I just don't have a trade. I have nothing to do. So what I know is I have micro high volume here, I got high volume here, and I got stops here. So I don't have a trade. I'm just going to sit here, subject to my plan and my fractal, and look for the stops to come out. Why did the market go down? Well, sellers and sell stops. Why did the market go down? Because the sell stops were there, there, and there. Now what do we know? There's buy stops above the market. And where are they? Mid VWAP. If I come up to that outside edge, to the IB low, to the low volume node, and out in this area, I'm going to be looking for a trigger. And then I'm going to either get scaled and come back here and maybe fall out the bottom, which would be the trade, or I'm going to take a stop. Cost of production and overhead. Emotionally, distressful. Business-wise, overhead and cost of production. So when I have the triggers of my emotional state, I have desensitized myself and chosen to ignore how I feel. The feelings have nothing to do with the business. It's wiring. So you got to learn about yourself. You can learn about this in Trader Lab, because I believe almost anyone can learn how to trade if they come to Trader Lab. Is it an A to Z solution? That's up to you. Once you understand how the market works and why it does what it does, not that you'll know what it will do, but what it might do, you can then be better prepared when you get alignment and you've done the work to know that there's a edge in your plan to step in front of the market, take the risk that we all don't like, not have confirmation, just have statistics. Statistics are what give you better control over your fear in an environment that's continually uncertain. How can you be courageous and be able to step in front of uncertainty? Imagine there was the edge of a cliff and you were blindfolded and you know you're walking towards the edge of a cliff. What would your emotional state be? Well, we experience it the same way here. You'd be in fear, and because of the uncertainty, you'd be triggered and you might be paralyzed by that fear. Well, for us, we are always in a state of fear and uncertainty, so we are in that emotional state. Now, fortunately for us, we're not walking off a cliff, but our body or mind or hormones and our primal wiring is having that same experience. So and it's almost like I say, driving a car, learning to speak a language, all of this is quote foreign. Playing a musical instrument, becoming a high performer on sports or anything, any endeavor, becoming a physician. Think about what you have to invest in time and wear and tear to accomplish those goals. It's no different here. If you're not willing to invest in yourself and the time can be much longer than you think it is to become proficient, then this is not for you. And I'm only saying that to you because it's just the way it is. Ask anybody who's made this a career. Come to Trader Lab, ask them. There's no shortcut. It's going to be years. And our nature is to look for shortcuts and easy. Unfortunately, there is no easy. But you can build a plan and you can educate yourself. You can extract a better understanding. And I'm not saying it'll take you years. It's all different. But lots of times what we have to do is take what we believe to be true and unwind it, because we tend to stick with the things we believe even if they don't work. And the reason that happens is because everything works at times. That's what happened to me. I built trading, built systems, and I would optimize them and they would work. And gradually they would start breaking down because you're always looking at the past, trying to, quote, predict the future. So even when you have statistics in an optimized process, they're going to always break down because you're looking back to look forward. Well, the current moment is not what happened Friday or any other day. It's right now. So instead of looking back, we need to understand structure and auction mechanics, which are happening right here, right now, and try to stay in alignment. For me, at least, that gives me the best opportunity to operate in randomness, in microstructure, so I can manage my risk, get risk neutral based on the Trader Lab process, and then the trade works or I scratch. Now, I take full stops. Everybody does. But because I have better execution and a better understanding, which I believe anyone can develop if they invest the time, I let go of all those indicators, and I had to ask myself, why do I use them? Well, I was looking for red light, green light, and I was assuming, because I had a software toolbox, initially they didn't exist, that had all these great indicators. So it must be a mix of indicators and time frames, and put it all together, and you got trading soup. And it works at times. So you're always going to go back and try to fix it and tune it and tweak it. Now, if that's you, welcome to retail trading. That's a path we all walk on. But if you keep waking up in the same place, they might be telling you something. We all have winning trades. We all have, just like gamblers all have winning hands. This is the retail price. This is too high. Here's your microstructure in this distribution. If this trade is going to do anything, it might come here. I don't have a trade here. But this is resistance, and it was created by the volume right there. Not actionable. What do I know in the order flow? Sellers were here. They were absorbed. Icebergs, 454-ish in this area. Absorb the buyers. Trigger, test. Come back here, test. If you're a scalper, not me, the trade's from there to there. I don't trade this range. I can't work in this. Not work. Why? You say why? Because the trade fails out here. Where would my stop have to be? I would be entering here, and I can't enter here. I'd be entering in this, and my stop has to be out here. Risk reward doesn't work. So what do I do with this? If this is my target, because this is the mean reversion. I can narrate it and anticipate the behavior here and the move to here. But where's my trade? Remember? It's out here. So this is where I'm looking for a potential short. And it's not a recommendation, because like every other trade we put on, it's always maybe. How we doing, guys? How we doing in YouTube? Please give a like. And again, if I drop out, it's the monkeys here in Costa Rica. They call them howler monkeys, and you wouldn't want to mess with these guys. You know, they're like little linebackers. And I don't mean, they're not the squirrel monkeys now. These guys, they look like little bodybuilders. And they stay in the trees most of the time. And they'll give you a dirty look. So this was too high. So let's just see. Now, the thing about the auction is we need range for trades. The auction is generic. It doesn't need anything. It just does its thing. Is this too high? This is retail. It was too high over here. There's my break. There's my test. What did we do? Break down. Come back. Here's my test. What's this? A potential trigger. Where might it go? There. That's what I know. And I can't go beyond that. Now, if I'm looking to take a short, what do I need in my plan? I need range. And if I got short out here, my goal is to come here. It's the same as trying to come from there to there, except now I'm doing it from a better location, an outside edge of a distribution, out in here. BWAP mid, thanks for playing. If I can squeeze those guys out and then get a trigger in this area, it's a short to there, structured trade. If you are a scalper, I don't do that anymore. I used to be a high volume trader in the NQ. I decided I want to keep my marbles intact. You could be trading this to this. But again, for me, the risk reward doesn't work, so I can't trade it, you see. So I don't have a trade here, but I observe the behavior. So this is retail in a developing time frame, in a fractal, leaning against this, where we had our sellers. This is too high. I can come here, or if I get through here, I'm looking for my structured trade out here, back to here, and maybe out the bottom. That's it. Questions? I hope you're getting something out of this, guys. Please give a thumb up if you're visiting in YouTube. Why is it used stops as fuel? Sasa, what I'm referring to is the market goes up to go down. It rotates. And for example, down rotation, where's the stops from the shorts in here? It's here. And where's the stops from any longs? Under here. So there's all different fractals and time frames. So for me, the trade that makes sense is to squeeze this leg out. It's no different in a short time frame than squeezing these buyers out. It's all the same. This is trading in fractals. That's why this was the shorts from up here trying to go down here, which it may or may not do. That's not the key. So if the behavior of swings and rotations is the same, then I take that idea and I bring it back here. If this was a day from here to here, imagine this is one of those RTH candles. It's the same behavior. The stops are here. So I want to see this get taken out. Because once the guys or the shorts in this leg get squeezed out, and there's also shorts going to sit here, my next structured trade is out in this area. We got to go look here. My high volume is out here. Here. So my resistance is up in this area. My area to observe for a short is right in here. So the next structured trade, and remember, guys, I don't call trades. The reason I don't is I take stops, you take stops, we all take stops. You don't need to take my stop. But this is a structured trade. Now, the thing about this in Trader Lab is where's the fuel? This is what you learn in Trader Lab. So you're not blindly just putting trades on. You're narrating the market, and you always have to be thinking, where's the fuel? And the fuel is the stops. The market trades into the fuel. That's why yesterday's low was a target coming down. It was the first area because there are sell stops under there. And then as we go down, we're getting into the sell stops underneath each of those RTH lows, you know. So yesterday's low, this low, this low. And we got them all out. Now, will we get to the next retail price, the highest retail price that was too low, that we had gapped away from? Are we going to come down here, or is the low of the day in? That we don't know. So while we're waiting for that, we're going to be looking for a short. And then either we just come down wherever we manage to trade, or we make a new low in the afternoon, most likely, and potentially come here. And, you know, we could go lower, but that's not my concern. I can't predict anything. Final questions, guys. I got about 7 minutes. And remember, there is a link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. There is no cost for this. There's a 60 PDFs of structured trades you can download. So you can kind of see these, and a library of webinars. So you can see this process in many different configurations or time frames. One thing about the market, it is generic in how it operates. What, in the sense of how, the behavior. What is the ultimate and continuing mystery is when, how, if, you know, uncertainty. So we can't solve uncertainty, but we can solve probability. And that's what trading is, probability. Remember how casinos operate. So if we're in a gaming business and we're interacting with gamblers, gamblers get paid. There isn't a business that doesn't have overhead and cost of production. I mean, this is the real world, right? So if you're going to be in the real world and not the fantasy of confirmation and certainty, which doesn't exist, then maybe you've got to change your thinking to operating in uncertainty and figure out how to do that. That's where statistics come in, because every moment is uncertain. So since we can't have certainty, what we can have is tangible metrics which create probability of an outcome, not the certainty of anything. Does that make sense? How are we doing in YouTube? By the way, guys, if you're visiting, please give a like. It's nice to be liked. Come to Bookmap Discord Trader Lab community. Again, no cost. I'd like to meet you there. Also, guys, if you're in Trader Lab, stay on the line in the Discord community. I'm going to visit with you briefly. And I want to talk to you about a couple issues and items and things of interest, some ideas, and to get your thoughts on. And remember, if you're in the Bookmap Discord Trader Lab and you're visiting in YouTube, you're welcome to visit the Trader Lab. Also, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer the library or the 60 PDFs of structured trades I have shared. I have shared almost 45 years of experience. And it doesn't mean it's the ultimate solution, but it means it's more like an advanced degree in trading. And it doesn't mean that your journey will be over. but it might accelerate your learning and understanding and get you on a track of what you need to do to create a business for yourself. It's about trade plans, metrics, and being in a community of reality versus fantasy. There is no shortcut. It doesn't exist, or else we'd all go there. What would you have paid to sit in a seminar for 3 days and then come out with the Holy Grail? I think we'd pay anything to have that ATM in the basement. It doesn't exist. Sorry to disappoint you if you're looking for it. It just doesn't exist. So if it doesn't exist, maybe then it's important to try to find what might work for you and to strip away beliefs that might not be in alignment with this business. This business is unlike anything you've ever experienced, and it doesn't matter how successful you've been in the outside world. This is like landing on Mars, and you're going to try to take what you believe and make it work here. Here's a little thought for you. There was a time, a long time, that ancient mariners thought the world was flat, and that if they sailed off, to the horizon, they would fall off, die and be the end. And they believed that they wouldn't explore. And it took some very brave individuals to say, well, we're going to see what happens when we sail to the edge, and maybe we'll fall off, maybe we won't. We call those explorers. Well, if everybody held the belief, did that make it true? Or is it really false? So individually, we come into this business with certain beliefs. Are they true or are they false? Do we all hold on to beliefs that may not be appropriate and in alignment? And we try to make them true for this environment? Or are we going to stay like the ancient mariners, concerned not to fall off the end of the earth? Or are we going to open our minds to other possibilities and then align with the reality? It's a question because it's what happened to me and it happens to most retail traders. We persist at things because they work intermittently. I think that's the catch-22. And I did a webinar on it called Trader Groundhog Day because we all keep waking up at the same place. Anyway, I think my time is about up. I got 2 minutes. Please give a like. I hope you got something out of this. I did my best today to try to show you integration in multiple time frames, fractals, how the market works, why it does what it does, how you can integrate order flow in fractals using microstructure. There's a lot of pieces, and this is not a 1 week study, and now you're going to be a successful trader. I believe anybody can learn to trade. Not everybody can trade. It just isn't going to work that way. It doesn't because of the work and the tenacity that you need to put in order to build out a business plan that has an edge. Thanks, guys, for visiting. This link in YouTube will be available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, review, and screenshot, and keep building out your library of examples of trades so we can all grow together. Thanks again, guys. Don't forget the thumb up. Click the link in the bottom of YouTube if you would like to visit the Trader Lab. There's no cost, and I look forward to meeting you there. And Trader Lab, stay in the chat. Be right with you.